The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Hello and welcome to the stock of the day. It is James Hardie. I picked it because of its US exposure and because I came across a note from Macquarie saying that for some Aussie equities, a Republican sweep is likely best. And one of the companies that scenario favors is James Hardie. But with that in mind as well, I had a chat with Zach Riaz from Banyan Tree Investment Group earlier today, who pointed out that James Hardie's share price is down nearly 16, 17% from its recent highs in September when the share price reached nearly $58. Of course, recent housing data of the U.S. is weak, and recent updates by competitors also point to the soft outlook. However, what's the longer-term outlook for James Hardie, and could current weakness be a buying opportunity? And just as a bonus, this will answer Sabir's question about James Hardie. He reckons it's one of the highest quality companies on market, recently being sold off. However, he also expects that with the rate cut cycle and weather events in the U.S. should see an increase in demand. He doesn't hold the stock yet, but he's wondering about its prospects for a long-term buy and hold investor. Is it a good buy at current levels? All right, so we've got a lot of people wondering the same sort of things about this company, James Hardie. I'll turn to you, Shawn Hickman from Market Matters.
Okay, thank you. Sorry, Rudi, I gave you a bum steer. I thought there was a question coming in on that. You picked the stock, Nadine.
I did.
Yeah.
Why?
Okay.
You got a problem
You're going
with
to try
that?
and catch me out, aren't you?
Yeah.
It's been struggling, as we know. It's got problems going forward. Short term, the uncertainty with the US home builder situation. They've had problems with costs. Nothing that we don't all know about. This stock is hugely correlated to bond yields.
Yes.
And people are talking about rate cuts. I know we had an outsized rate cut recently in the US, but bond yields are now at 11-month highs. So higher for longer, especially is the likely scenario of Trump wins, which means the housing stocks are still going to face headwinds. We think that James Hardie is a top quality stock, but I would be buying it on the back foot. I wouldn't be saying it's a buy here. I'd like it into the back foot. So you buy 10% here, 20% lower, 20% lower, sort of accumulate into weakness. It is more of a macro play on bond yields, and at the moment, I don't see any signs that bond yields are going to roll over, although I do feel we've gone from bond yields were as good as it's going to get in how they were factoring in rate cuts only maybe 4 or 5 weeks ago. Now I think they've gone 180 and bond yields are looking a bit too hawkish. I think somewhere in between the two is the right place, which means that stocks like James Hardie should improve. There'll be a lot of volatility the next week, I'm sure.
So not now.
I just think you could dip your toe in the water now, but you wouldn't go all in.
Got it. Thank you. James Hardie, goodbye now?
Yeah, I think so. And I agree with Shabir's assessment as well. I think there are about maybe a dozen, maybe a few more companies on the stock exchange that you can truly say they are quality, high quality. And what they have in common is that if you take a longer term view, they do end up on the right hand side, on the top near the top of the price chart, instead of on the left hand side near the bottom. And James Hardie is one of them. I mean, the other ones you can think of, for example, as Zero, Aristocrat Leisure, Technology One, and the likes, ARB Group. The only but I have with James Hardie is that, contrary to all the names I just mentioned and to some of the other ones that are high quality, this one is also extremely cyclical, and that makes it, as you see at the price chart, that makes it extremely volatile at times. That is good for people who want to get in the stock. It's a bit less comfortable when you're in the stock already. And I mean, you can't just always throw money at it when weakness appears, because then it becomes just too much of a leverage in your portfolio. Contrary to Shawn, I think you could buy here. And maybe if you are afraid of the volatility, you do exactly what you say. You take an initial stake and you see where it goes. If it drops, you add more. If it runs away from you, then you're on board. But the share price doesn't look too expensive here. And again, when you start from a lower price point and you have a long-term view, then the chances are very high that ultimately you'll end up near the right-hand corner on top of the price chart. Just that the timing of things is not always that easy to do. But
Got it.
I'm pretty confident that, this company still has so much growth on its belt.
So I'm calling it a buy from you.
Yeah.
Got it. Thank you. So the stock of the day, James Hardie.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.